Hello, everyone. Welcome to SPAC Chat. I'm Karen Snow, head of East Coast listings here at Nasdaq, and it's my great pleasure to be speaking with David Boris, serial SPAC sponsor. David and his partner Marshall have successfully completed 2 business transactions, including Converge One and Tattooed Chef, and now Electric Last Mile, which is in the works. David, welcome.
Thanks, Karen. Thanks for having me.
Why don't you start by telling us a little bit about your background as well as your partner Marshall's and how you came to be business partners?
Sure. Well, my background is on the investment banking side. I spent about 30 years on Wall Street, and during that time, I was one of the first people to come across SPACs. Thought they were extremely interesting, and whenever I had an opportunity to work on a SPAC-related transaction, I did. And so fast forward, as a banker, I worked on 25 SPAC-related transactions, either on the IPO side or the M&A side or as an advisor. And that gave me, the impetus to want to go out and be a SPAC sponsor. I was fortunate then at that point to ring up my good friend Marshall Keeve. Marshall and I have known each other for 20 years, originally through an organization called YPO, Young Presidents Organization, where we were both active. And Marshall comes out of the family office side and private equity world. So we really complemented our skill sets. And I originally asked Marshall if he'd be willing to potentially be a board member if I did a SPAC. And he said he would love to actually be a partner. And that's how it all started.
So from your perspective, what is it that makes Forum Merger different from other sponsors?
I think it's a few things. Number one is really our experience at this point. As I said, as a banker, I was fortunate to work on a number of transactions across a lot of industries with a number of sponsors. And that really gave a great foundation. I think it's fair to say I've seen almost everything in SPAC world at this time. And so I think that helps the companies that we choose to work with. But now that Forum 4 is in the works, and as you say, we've successfully completed 2 and have 1 pending, that experience that we've gained as principals, I think really is very valuable to our merger partners. And second, we're generalists. We don't come in with our own agenda. We don't come in with preconceived notions on how companies should be run. We're looking to back wonderful management teams with exciting companies, and we're agnostic about what industry they're in, as you can see from the 3 transactions that we've done. And I think those characteristics really set us aside.
That's great. And when you're evaluating targets, how do you think about that? What are you looking for exactly?
Well, we're looking for a few things. Number one is management. Marshall and I were just saying the other day that obviously the management teams we back, we think are awesome, but I think you could probably take any one of those teams and drop them into another company and they'd be equally as successful. These are men and women who really know what they're doing, happen to do it for the companies that we back, but are just great managers. So Marshall likes to say we back the jockey and diligence the horse, which is the industry. And I think that's proven out to be very true. But we do look for great companies that have tailwinds, right? Where the rising tide is lifting that ship. If you look at Tattooed Chef, the rise in plant-based food was something that really attracted us. Clearly, what's going on in the electric vehicle world is extremely attractive for us in Electric Last Mile Solutions, the transaction we're working on right now. And so we look for companies that have good growth characteristics, where the SPAC, which we view as an IPO alternative, is going to be an accelerant that allows these outstanding management teams to execute their business plan better, faster, more efficiently.
Can you talk a little bit about that in terms of what is it about the SPAC business model that really the sponsor becomes the accelerant, versus the IPO?
Well, I think that, the SPAC versus IPO, question is a really good one. I'm biased because I'm a SPAC sponsor and I've been a SPAC banker, but I think 9 times out of 10, if a company has crossed the bridge that they want to be a public company, they're ready, willing, able, they understand what's involved in being public, and they think that's the best way to go, I think a SPAC can really a better path than an IPO, a traditional regular way IPO. The SPAC is faster generally. You can negotiate your business combination, so your valuation is known upfront as opposed to an IPO, which has a price discovery mechanism in it. With the use of a PIPE, which most SPACs have now, you get a level of certainty in closing your transaction that you don't get in a regular way IPO. And of course, many times when a company does go public through a SPAC, there's a financial sponsor or a family or so involved who are the initial shareholders, and they have an interest in taking some capital off the table at the time of the merger. That's easier to do in a SPAC merger than a regular way IPO. And then finally, and I know this is an area that people are focused on, is the use of projections. In a SPAC merger, you get to tell your story as the target company or the merger partner by using some projections judiciously, intelligently, and we always make sure in our cases. Whereas in an IPO, that's not the way a normal IPO works. Wall Street analysts have to develop their own set of projections, and the company is basically wedded to what the street is thinking. So we think you have an opportunity to get a better, faster, more secure, more certain transaction where you get to tell a more fulsome story through the SPAC merger than through the IPO. And that's, we look for management teams that agree with that philosophy.
And when you are meeting with management teams, what advice do you give them in terms of considering their sponsor partner?
Well, we try to give them as much advice as we can, whether they do a transaction with us or they do a transaction with another SPAC. We want them to think that we steered them correctly, gave them good advice. And so I would say we tell them, one, not all sponsors are the same, right? There are sponsors that do come in with an agenda. Their attitude is, we're going to come in, we're going to do this business combination, and we're going to help you run your company better. We know more than you do about your company. That's not how we function. I'm not saying that that's wrong, but if you're not looking for that in a merger partner, then don't talk to those sponsors, because that's their philosophy. We think the experience angle is extremely important, right? If you needed surgery, it's not crazy to say to your physician, have you done this surgery before? What's the outcome? How many times? Can I speak to patients that have gone through this, right? So there's a lot of SPAC sponsors out there that have never done it before and will never do it again. And we think that sets us apart. So we tell our management team, check us out, see if we're the type of people that you want to work with, see if our philosophy, which is to be supportive, minority shareholders in these transactions, is the philosophy that you're looking for in a partner. If you are, that's great. If it's not, that's great too, because there's a lot of other SPACs out there that you can talk to, and you should find the right partner. I think it's analogous to the private equity industry, right, which grew up over time, and now there's lots of different private equity sponsors, and they all have different philosophies, right? And they come in and they pitch, let us invest in your company, and some say we're very hands-on, some say we're very hands-off. Some are industry experts, some are geographic experts, some have a different strategy. And so just like private equity over all these years have developed different strategies, I would say we're now at the point where SPAC sponsors have developed different strategies as well, and you should pick the sponsor that fits your needs if you're considering a SPAC merger.
Yeah, I think that's very well put and perfect analogy. So lastly, I'd love to get your opinion on what you make of the recent SPAC trends.
Well, I think the analogy I like here is the pendulum, right? Pendulums swing too far one side, they never stop in the middle, and they swing too far to the other. So I've been around SPACs since SPACs were invented, and I would say, they were underutilized for many, many years, right? We went a decade, I think, where there were not a single SPAC offering. And then they picked up their momentum and they hit the middle, let's say, which is where a good equilibrium, where there were a lot of buyers and a lot of interested companies. And then I think went past that middle too far to the other side, and I think the market did get overheated. And I think that the PIPE buyers, who are an important part of the SPAC ecosystem, were overwhelmed. I think investors, both retail and institutional, were sort of overwhelmed with just the velocity of SPAC transactions. I think it was hard to keep up, hard to do all the right analysis that an investor should want to do. And so as a result, it slowed down, and now that pendulum is coming back to the middle. So I think it's natural. We've seen it before in the SPAC market, where it starts and stops sometimes, just like the regular way IPO market does. And I think that the market will hit an equilibrium and stabilize, and we'll find a normal level of SPAC issuance and SPAC merger.
That's great. Thank you so much. Any final words of wisdom before we sign off?
Oh, let's see. I would say if you're a company that's considering a SPAC merger, think about it, intelligently, get the right advisors, the right bankers, the right lawyers. It is a great alternative to a regular way IPO, but it's not easier. It may be faster, but it's just as intense. If you feel that you should do a SPAC merger as opposed to an IPO because for some reason there's less diligence or less work, none of that's true. And to SPAC sponsors who may be doing this for the first time and are talking to those types of companies who feel that this is an easy way to get public, I would say those aren't the companies you want to do business with. A company that merges with a SPAC should also be a company that's ready to do a regular way Nasdaq listed IPO and chooses the SPAC for all the right reasons, not because they think it's a shortcut.
That's very good advice. Thank you so much for joining us today, and our very best wishes for your continued success. And that's it for SPAC Chat. See you next time.